Hey guys, good morning and welcome to the June 28th Camp Financial stock market update. So, yesterday we finally took a breath and thought about what the Brexit vote means. And a lot of the stocks, pretty much all of them, I think, kind of found a footing from Friday and Monday sell-off. So the S&P 500 yesterday ended up 1.78%, the Nasdaq 2.12%, and the Dow Jones up 1.57%. And so I think a lot of what we saw yesterday was the panic from Friday and Monday kind of working their way out of the system. That was a lot of traders that were probably in positions that they did not want to be in, or possibly were over leveraged in certain sectors, certain areas. And so that's, I think, the pain we saw. And now it looks like we're starting to see the market kind of react back to it, figure out what's the long-term implications, and kind of set a current basing system or position, and then we'll wait on reaction from there. So with that said, let me pop over to the S&P 500 and let's see who did the best yesterday. So the top stocks yesterday were basically majority of the top 20 were in the basic material, oil and gas. Oil and gas took a pretty good jump yesterday. So those 5 companies that are in the top 5 of the S&P 500 for percentage gains yesterday. Indo International, a drug manufacturer out of Ireland, which makes sense, right? I mean, it's the UK company. That's where the bulk of the pain was, and I know the healthcare and health insurance industry got hit pretty hard on the Brexit vote. So it makes sense that they would be number 1, and then 2 through 5 are all oil and gas companies. You have Southwestern Energy Company, Marathon Oil Corp, and Cabot Oil and Gas, all independent oil and gas companies. And then you have Marathon Petroleum Corp, the refining piece of Marathon, that also was up 8.4% yesterday. So the Indo International up 18.26%, down to the 5th highest, which was Cabot Oil and Gas at up 8.02%. So a lot of volatility. I mean, obviously, moves like that are very volatile. But it looks like we're kind of finding the baseline. And then the other side of that trade, so now let's look at the laggards in the S&P 500, and the majority of the bottom 20 are in the consumer goods sector, which makes sense because pretty much every time you see these trades for safety, trades out of safety back into a little more speculation, those are the types of companies that you're going to see. So the consumer goods gets beat up when people are willing to speculate, and the speculative, some of the more aggressive oil and gas companies, biotechs, that sort of thing, tend to get beat up. when people are fearful and they want to get into companies that are long-term, stable, small growth companies. I mean, companies that they're more concerned about being able just to hold the value and continue to throw off dividends without having a lot of volatility. So our bottom 5 in the S&P 500 yesterday: Hormel, DuPont, Dow Chemical, Tyson Foods, and Kroger. Like I said again, so you got two food companies, Hormel and Tyson. You got Kroger, who specializes in grocery stores, obviously, and then DuPont and Dow Chemical are basic material companies, but they're more in the chemical, and it's more their businesses are more stable, obviously, than the oil and gas refining side of it. So to take a look at the Dow now. So one stock down yesterday in the Dow out of 30, and that was DuPont. So I'm going to take a look real quick because I'm curious, and bear with me while I pull this up here. I want to see if there was news that came out on Dow yesterday that pushed it down. So you see that it looks like they've announced a cut of 2,500 jobs. And there's the kicker. So there's what pushed DuPont down yesterday. JP Morgan came out with a report, and they downgraded DuPont, and I'm pulling up the report right now to see what it says. What did they downgrade DuPont to? Well, while that loads, let me take a look here. So I was reading one of my books that I got sent on my desk here, and I thought it was very interesting. So it talks about the building blocks of an individual's financial success, right? So obviously the foundation is your regular income, whatever that would be. That's kind of your baseline. From there, most people, and I'm guessing anybody listening to this, right, has a checking account, savings account, etc. The next piece to think about, or that you need to plan for, is to establish long-term goals, short-term goals. What do you want to do with your money? What do you want to do for a career? What do you want to do? A lot of different things. Make sure that you have an emergency savings, and then so it says realistic budget, but I was listening to somebody else the other day, and I think he said it best of anybody that I've heard say it. Let's call that your spending plan. I think budget is a connotation that people are fearful of, maybe. Fearful might not be the right word, but I guess it creates some anxiety in people. So let's call it's really, semantics as far as changing the name of it from a budget to a spending plan. But think of it more as a plan than like oh my gosh, I need to absolutely stick to this, right? Plans change. So consider your budget a spending plan. And that way, if things don't go quite the way you planned, you make do, you make the changes where necessary. So, then the next piece to understand is to manage your expenses, whether it's taxes, whether it's housing, whether it's your car, etc. Always manage your expenses. Try to keep them as low as you possibly can. That's another piece that's going to help you get to your long-term financial goals, your long-term financial success that you want with within your life. So from there, the piece it talks about, so it says to handle all of your debts, whether they're credit cards, installment loans, maybe a car loan, a mortgage, student loans, whether you're going to help your kids with their student cost, and then obviously having a savings account and building your savings account. Handle your savings account. Make sure that you're putting it in a place where you're getting the best return that you can. I mean, obviously savings accounts aren't returning much right now, but you need some liquid cash, and a savings account's a great place to keep it, even if you're only earning 0.1% I know there's banks out there that are offering about 1% right now, depending on how much money you have with them. So you got to shop around for that. And then the last piece is to invest. Invest in you and a business if you're interested in going that route. Invest in mutual funds. I've kind of went with Jim Cramer's maxim on investing, that the first $10,000 I put in mutual funds, and then I invest my own in stocks. But I enjoy stocks. I enjoy the research process. So maybe you don't, and maybe mutual funds make more sense for you to invest in because you don't have the time or the inclination to study the financial markets, and that's fine. I mean, with most mutual funds, ETFs, etc., you're getting a guy who's sitting at his desk every day, and that's what he does. He spends time researching and learning about companies in order to make more money. So other ways to invest: real estate, obviously. If you have a rental property, I have one where it gives me a cash flow every month of $100. It's not much, but if it pays for itself and I get a little extra, that's fine. It gives me the ability to compound on the eventual price appreciation of the house. So and then the other piece that says to invest is retirement plans, but I would think I kind of lump retirement plans in with mutual funds and stocks and bonds, etc., because most people, that is going to be the majority of their investing is in there, either 401k or 403b, whatever it may be, IRAs. So yeah, I kind of look at retirement plans. I think you need to look at all that kind of holistically, so that it doesn't, you're not working against yourself in one area versus the other. You may want to invest a certain aspect here, but just know that you need to look at all of your investments together and make a plan based on that. So I wanted to go back real quick before I sign off today and talk about the JP Morgan. So JP Morgan downgraded DuPont from an overweight to neutral. So that is why we're seeing, that's probably why we saw the drop yesterday. I don't see a price here that they downgraded it to, but I'll take a look at that and we'll try to make sure I make that a part of tomorrow's podcast. So everybody, take care and happy investing. We'll see you tomorrow morning.